Stocks were mixed on Friday following the release of the Labor Department's August jobs report, which showed a sharp deceleration in hiring last month. The S&P 500 traded the flat line after reaching record intraday and closing highs just the prior day. The Nasdaq edged higher to set a record close as investors piled back into technology and growth stocks, which are viewed as more defensive with a decelerating economy. And the Dow fell only slightly. Investors were closely watching the jobs report. Non-farm payrolls disappointed with a sizable decrease from the more than 1 million job gains posted the previous month. The report was consistent with the deceleration evident in other economic data as well, including retail sales and consumer confidence. And with regard to the stock market, what we're really seeing is the market wrestling with the question of reality. Is it about the economy or is it about monetary policy? So what happens next in the markets? Well, there have been 10 other years in which the S&P 500's gain through August surpassed 20%, and that according to data compiled by Bloomberg. The final 4 months of those years brought everything from a 21% advance to a 32% decline. Well, not much insight into that. It's about as good of information we would get from George, who, by the way, is my one and only hater at this time. So, we'll just have to contend with the charts. So, let's take a look. And now we're taking a look at the 6-month daily on the spiders, the SPY, and the close on Friday was 453.08. And of course, this is going to be what we've seen time and time again for several months, is this channel with the bottom line running through here and the top line running through there. Now, if you've been noticing, say beginning here, but more like beginning here, say in mid-May, we have a nice cycle. Move up and then down. Took about a month. Another up and down. Took about a month. Another up and down. Took about a month. Now we're on our way up, and guess what? Well, I think maybe next week or the week after, I would imagine, we'll be coming on down to complete the cycle. But things change once you understand them very well, so keep your eyes open. Into the volume, pretty normal, nothing unusual. And then the MAC, same thing. We've got that bottom trend line moving up. It's supposed to be a straight line. It isn't, but you get the idea. And as long as we continue elevating upward, that's what's going to happen with the stock market as well. Moving down into the histogram, pretty much the same thing. The cycle moving up and down, above and below that zero line. And as long as we do that, we have a relatively balanced market that's going to continue on up. Down into the price rate of change, we're elevated above that zero line for the most part. And as long as we can stay above there, the strength continues. And then the same thing there in the RSI, and you can also see the cycles here as well, up and down and through there like that, with a pretty decent cycle. Also relatively balanced above and below that 50 line. Moving down into the stochastics, very strong above that zero line or 50 midline, with the cycle as well intact. And here into the Williams, you see the same thing, and this shows a little bit of strength than each of those higher lows. Moving back on up into the price chart, one last look. It's pretty boring once again, but hey, you're making money. So the only thing you need to do is, yes, you're right, be patient and prudent. And for today, that's ChewDog Charts. Thank you.